What's up, everybody? Michael and Coco here. You're watching the Daily Stock Market Brief. Today's date is October 21st. If it's your first time here, welcome to the channel. I do these videos Monday through Friday. This helps us get a good idea as to where the market might be headed next. In today's video, we're breaking it into four sections. We're going to be talking about the indices, the indicators, commodities, and US dollar, all surfaced around using technical analysis. Let's go ahead and get right into it. Alrighty, welcome back. We're going to first start off with the indices, and in today's video, I'm going to be covering, I would say, the price action here looks bullish, and I'll talk about the more bullish case. However, the indicators are kind of just giving me, I should say, just some concern. So the price action is looking somewhat strong, even though it's been choppy back and forth, but the indicators are giving us some warning signs. So I'm going to give the more bullish case mixed in with some bearish sentiment. And I think this all has to do really with market uncertainty. We obviously are getting hit back and forth with all this stimulus news lines. So really the market is kind of just swaying back and forth a lot, as you can see the previous 2 days. We're going to start here on the SP 500 on the daily time frame. And as you can see here, just two inverted hammer candles, both inside trading to the previous day, this big red day. And we've been kind of just trading sideways since then, just up and down, up and down. We have not captured the 5 EMA, so that's more bearish. But what you can see here is somewhat of a bull flag. We pulled from way back here, and we pulled, basically just got a flag pattern sideways, and we're still above the neckline. So it could very well just be potentially a bull flag. However, on the 2-hour time frame, I drew out what's called a cup and handle formation, and we've been talking about this, could be potentially a cup and handle. So I wanted to put it out there saying, yeah, could very well be. Now, a couple things to consider. If it is a cup and handle, first we want to make sure that we're breaking past this trend line, and clearly has been holding for a couple of days here. It's kind of within this channel going down, and you can see the bull flag, kind of coming up. We still have a couple gaps underneath us. The RSI is not showing us too much strength, and then also, the MACD isn't either. So right now, we've been hitting this trend line for, multiple different candles, and each one of these candles represents 2 hours of data. So it's very possible that we start heading down lower to the bottom portion of this channel, and we can still technically be within that bull flag or cup and handle formation. So we're going to be monitoring this one closely to see, hey, if we start breaking out, we might get some sort of a push higher. Now, it probably goes without saying, obviously what could happen is some positive stuff around the stimulus, which it doesn't seem like we're getting it, but these headlines could whip us back and forth quite fast. So keep in mind, if we do get stimulus, I would definitely imagine that we'd see that breakout if the deal is passed. If it's not, then I continue the belief that we'll probably sink a little bit lower. Here is the S&P 500 on the 30-minute time frame, and we went over this yesterday. I have been watching this channel, and really what you can see today is just the last hour, we really crushed down to the downside, finishing down for the day. And this green shaded box area is going to act as a level of support. The reason why this can act as an area of support is because it clearly acted as support down here, and it's acted as resistance over here, and also support right there as well. So this could very well hold up. Now, if we start getting below it, this is where I was saying it might create a positive divergence in the RSI and also the MACD, perhaps. And that could mean that, once we get down to the lower portion of this channel, it could set itself up for a very good trade to the upside portion of this channel. So what I would expect to see if we do continue the move down in here, then I would imagine we're going to be getting some news headlines around positive stimulus stuff, either positive vaccine information, and then we'll see that bounce as long as the positive divergence holds up. Then below that, we have this gray shaded box, and that right there is just a gap that has yet to be filled. Here is the Nasdaq 100 on the daily time frame, and pointing out the cup and handles. Now, what we still see is 3 gaps moving to the upside. Now, you can call this a bull flag as well. Having these gaps underneath give me a little hesitation, but we currently have that inverted hammer candle. Right below us is this gap. So if we get kind of lower throughout this, we might expect to see some sort of a bounce from this lower portion of the channel. It's very, very possible, especially when we were drawing this out as an inverse head and shoulders, and this was kind of the neckline. It kind of comes all into confluence right here. You have the gap, you have the 61.8 or 50% retracement level right around there, and then you also have the neckline that was previously resistance, and now it could be support. So, you know, we got to pay attention for here because it does look like that we're going to see some really good opportunities to start trading here in the near future. The MACD down here looks like it's about to start crossing over, which could be bearish. However, you know, it's still above zero. So, you know, you can note it, but don't put too much weight on it. Here's the Nasdaq 100 on the 2-hour time frame. I redrew out this kind of channel that we've been in, and then also we're in a down channel. So we have an up channel and a down channel. Up channels within, you know, the down channel, but keep in mind this last hour of trading came back, crushed pretty much the day, complete day of progress, and you know, we're at the bottom portion of this channel. So overnight market, we might get pushed higher up into it. We'll see. If we do start moving up higher into this channel, there could be confluence up here and then up here as far as resistance goes. Right below us, there's that gap, and it could be potentially at the bottom portion of this channel. If that's the case, if it comes down here, we very well might make what I've been saying was the positive divergence in the RSI. So we'll have a higher low on the RSI, but yet we'll have a lower low on the price action. So that could very well set us up for another potentially good trade from that area, at least a really good risk versus reward trade. If you go long down here and you have a stop loss underneath it, could set itself up for a good profit. We will see. Here is the Russell 2000, and the Russell 2000 has been getting hit these last couple of days, but overall, I mean, it's been doing quite well comparatively to the other indices. I just drew out a bull flag that this could be potentially consolidating into, and we might see a break here in the near future. Now, if there's bad news around stimulus, bad news around vaccines, something takes place, yeah, this could head a lot lower, and we could break through this horizontal line that acted as support, and we could probably come in and touch this 50-day period moving average. We will see. And then the last I want to just touch on is the Dow Jones. Notice how we used to have the inverse head and shoulders, but we broke out. That's kind of like how all the charts are. I just kind of updated them. I wanted to just call out the bull flag right here. It could be considered a cup and handle as well, but this move is pretty aggressive to the upside. So I'm just going to call it a bull flag. Now we've been hitting the top end of this trend line, so it's very possible that we head a little bit lower, potentially into the 50% retracement level. But before we get there, we need to break through this previous neckline and this 61.8% retracement level. So far, the bears have control of the EMA, the 5 EMA, and we're basically sitting on the 61.8% level. So just a lot of back and forth these last couple of days, a lot of uncertainty. Like I said, we had the VIX future expirations. It was today, I believe it was. Today's Wednesday. And we have all of this stuff going on in the news. So we need to, be cautious. But what I want to kind of get as far as the narrative goes here is overall, the price action itself could be very, very bullish. It's setting up to look pretty good, but the things that are going around us aren't all that great. So this could be just one big fake out, in my opinion. But let's get into the indicators to kind of get a good idea so we can see a little bit behind the curtain here. So the first one I want to talk about is the VIX. This is a sentiment indicator. And from a bearish perspective still, right, we are in an inverse head and shoulders. And if we start breaking above this 200 period moving average, which we had resistance there today, it could get very punchy and we can move a lot higher. If we break through this neckline, it could get very volatile, and it's typically an inverse correlation, so you'll see the SP500 draw down to a lower point. However, where it's at right now, it's kind of in this sideways channel, and we have a inverted hammer right here, so it's very possible that we might start heading back down lower. Still, the pattern is in play. We have this gap below us. This is just setting itself up for something big, and I think it's just kind of moving into the election until we start seeing some things take place. I don't know if that's going to be the catalyst for a move down or a catalyst to move up. Mix that in with the seasonality chart, and we're looking at October. Typically, the end of October gets pretty rough to the downside, but when all that election stuff handles out, you could see a big rip to the upside. Now, there could also be a contested election, so that kind of is over our head as well. So overall, we see some bullish price action, some concerns with the indicators, and we'll have a couple more here that we're going to be going through. So it's really just, you got to just be careful in this environment when we have all these mixed signals, because there's nothing leaning a specific way right now. Here's the CPC smoothed over a 10-period moving average. We use this red line as a sell signal, and really when it crosses below, that warns us saying, hey, things could get shaky here. It's everyone's really bullish. That's the sentiment. It's really bullish right now. And typically when all the sentiment is bullish, it's the time to start looking for more bearish type trades, because everyone is bullish. And then, that means the trade's been set. Then we swing over to bearish. Now, when we cross above it, that's the quote unquote sell signal. And the sell signal basically means have your stop losses in place, take some profits, make sure you hedge your long positions, and just be careful in the environment. It doesn't mean a crash is going to come, but, when it does cross above it, I'll have you look, but when it crossed above here, when it crossed above here, crossed above here, crossed above here, you saw the price action, bounce around for a little bit and then move to the downside. And there's no telling how far it can go or how low it can go. But we use another indicator called the Pring Bottom Fisher to help us find where that bottom might be set at if it reaches a certain area. So keep in mind, the sell signal has been set. Here's the CPCI, and not the sell signal's been set, but the warning's been set and the sell signal might come. Sorry. CPCI, this is the put to call ratio index. And there's a couple things that you got to look at in this area. So we have the index, which is options on the major indices. And this is typically professional traders, institutions, hedge funds that hedge their bets. So when it's, it's typically always above 1. And when it's above 1, that means that technically it's bearish sentiment, but it has to get overextended. So this is on the weekly time frame, mind you, and I added some envelopes. So when it gets very overextended, that's the smart money buying puts. Now, it could be hedges, and we need a couple other things to align in order to know for sure that, is this market going to roll over? But you can see in the past, I did these blue lines. When it gets very overextended past the second envelope, you see some pullbacks. And it's not instant by any means. It's a lagging indicator, but it's giving us some forward-looking, notice. And this one right here was just about to be April 2007, and it kind of hung up there for a while, right? A couple months there, bouncing around. And then we had the financial crisis. Over here, we got into the zone, and then we got above it. And then we saw, a pullback from here to down here. And it doesn't look big, but remember, keep in context, this is, it's quite a drastic move when it gets up that high. Here, it didn't really do much, so it might have not have aligned completely. But if you got it when it did extend over in this sharp move, you do see a price moving down a little bit. Then here, it didn't do much, but it did hold up on this area. And we saw, from here and then pulled down to around this range. Here, we had that big drawdown in late 2018 into 2019. And then we kind of been just trending upwards. So, notice the trend line going up and, bouncing back and forth, kind of moving up like this. That means that kind of just bearish sentiment is rising, is what that tells me. It's getting higher and higher and higher. And right now we're just very overextended. We're at 1.69, and, that's a pretty overextended move, which tells me that, the smart money could be buying puts here and getting a little bit more aggressive with it. The sentiment is from the smart money is telling us, hey, things look a little overextended. I wouldn't be surprised to see some pullbacks. But, it's just to note. It's nothing's for certain. Yes, we can look at history, and history's told us before that, it's pretty accurate, but not always. And here's the CPCE. This is the equity side. So you have the index, which is professional. Then you have the equity, which is like options on individual stocks. And typically this is more like retail traders, and it's considered dumb money, going up against the professionals. And when it gets overextended to the upside, keep in mind I inverted the scales because you want to have everything aligned to the upside, the way that I look at it at least. So I inverted the scales. So the higher that this line goes means the more bullish the equity put to call ratio is. And when it gets very bullish, the average person might say, hey, everyone's bullish, let's go, get long. But what I'm saying is when things get overextended, that typically means that that trade is over and it could start turning. Now, the most recent time it got overextended, that was in the September peak, and then we saw that down, the move down. And what we're seeing right now is it crossing above that second envelope, and it could just be telling us right now everyone's a little too bullish, and we might start seeing that pull back to the downside. It's very possible that if the news comes out, like if we get the certainty and they stop jerking us around with all these headlines, that could really send the market a lot lower, knowing for the fact that we're not going to be getting that stimulus. So, and then who knows about the contested election, what that can do. Mix that in with the seasonality. There's just so much going on right now, and that's why you got to be so careful in the markets. Right here is the NYMO, the Nyse-McClellan oscillator. Big negative print today, minus 19. This is looking very similar to 2018. Here when we hit that all-time high on a negative breath, we shot up to the upside, and then we came down and spiked lower. We did spike as low as, let me see here, 40, and we're only at minus 19. So if we get a little bit deeper of a spike, this can very well get us a double bottom right here at that 3,200 to 3,250 level if we get that movement to the downside. But as of right now, it's looking very similar. Take it for what it is. It looks similar. I don't know if it's going to continue. We looked at the price action, and the price action says, oh, no, you can look at this as a very bullish, it could be very bullish. However, when you start looking at these indicators in previous history and the sentiment, things are also saying like, oh, what's going on here, So we got to be careful. Commodities, interesting stuff today. Gold, pretty strong day. I was actually pretty shocked to see this, and I can't wait to get in the dollar chart because I changed it up a little bit, and it might shock a few people. But yeah, we've been just trending up higher. We broke over this trend line. We got rejected by the 50 period. I'm not fully convinced on this move. Like I've been saying, I want to get above 1950 and hold that. And then I would really like to start getting above this level at 1980 because of the fact that means we would be changing this lower high kind of moment. So we have, high there, then lower, 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 lower. So if we start converting this into a high, we're getting higher lows, but now we need a higher high. That could signal a trend change. That could be pretty strong. That could be good for gold. I might consider buying more if we start getting up in that range. And then when I do, it's obviously going to fall and collapse, and then I'll buy more down here. I'm just kidding. I don't really know, but it typically happens that way, right? Here's silver. Silver's been coiling up in this ascending triangle after this bear pull, still below the 50 period, but this is also looking pretty good. It's looking like it wants to start breaking to the upside, but keep in mind, it's still coiling within this pattern, so it's very possible that we might get a false breakout and then break down. It's very possible. But what's going to tell us that? It's going to be the US dollar, the chart that everyone should be paying close attention to, and voila. Oh, wow, this looks a lot different. Yes, it does. It is and it was a cup and handle pattern. But after today's price action, it looks not that great. I'd be reaching to say it's a cup and handle. So really what I've been trying to say also during this whole process is it's in a range, and if it gets above 94.5 or above 95, that would be bullish, and if it gets below 92, that would be the trend continuing to the downside to be bearish. And really it's just been range bound, going sideways. Like right here, this is right here in October, and if you look back all the way over here, it touched that level, at the end of August. So we're in the same exact area as we were at the end of August, 2 months later, right? What did I draw out here? Well, we're forming a head and shoulders. This is a bearish pattern. Now it's towards the end of end of a range, so we don't need to hold too much weight, but this is what it is. And the neckline just happens to be right at 92. So yeah, this is interesting to me. We have the left shoulder, the head, and then the right shoulder. If we start breaking below the 92, and this is a head and shoulder pattern, bye-bye dollar. It's going to sink deeper, and we're going to see gold and silver move up. That's just going to be the case, But I will say this is 4 pretty big days to the downside. It's going to be interesting. We might, come down here potentially, and then might bounce from this area, or You know, so we're going to have to watch the price action, but I wanted to give you an alternative view here because it does look a little scary as of now, and that cup and handle pattern, you can make an argument that it's still intact. I would call it more range bound personally and add in this head and shoulders. So, you know, it is what it is, what it is. That's all I got for you on today's daily stock market brief. I will see you guys here back tomorrow. Hasta la vista.